Guys, and welcome to My Finance Teacher. Let's talk about what's going to happen today, and that is the FOMC meeting and a possible Fed rate hike coming from Powell. Looking at the futures, CME shows that, well, there's around 73% chance of the Fed rate hike actually taking place. It's hard to say which way it's going to go. I'm still leaning towards a higher possibility of a Fed rate hike, although there is some chance, I guess, I would say 35–40% of a probability that the Fed will back down and not increase the rates this time today because, well, the markets, look at S&P 500, the markets are not performing well. Even just since the beginning of December, S&P 500 already lost about 8%. But in this video, I actually want to concentrate on the dollar, on gold, and GDX. So I'm not really going to talk much about S&P 500. So what's going to happen to the dollar? On one hand, this intermediate cycle in the US dollar, which only started in September, still has quite a while to go. These cycles last for around half a year, usually, sometimes even quite longer than that. So in terms of time, duration wise, there is still a lot of room for this intermediate cycle to continue advancing and dollar becoming stronger over the next several weeks. But it all, I think, depends on what's going to happen today at the FOMC meeting. Is the rate hike going to take place today? And if yes, will Fed provide some sort of dovish comments going into 2019 and several more planned rate hikes in 2019? I think more or less recently, over the last couple of weeks, because of a lot of weakness on the market, a lot of people are questioning whether Fed will actually increase the rates. And for that reason, dollar isn't really rallying anywhere in anticipation of any Fed rate hikes. As you see, since the beginning of December, dollar is basically where it was, hasn't really changed that much. What it means is any potential rate hike might not be really priced in to the markets. So if it does happen, especially if the Fed is not really dovish going into 2019, then dollar might strengthen for another several weeks. And looking at RSI on the dollar, it's far from being overbought. So there is again a lot of room for dollar to strengthen over the next several weeks, both in terms of RSI and in terms of the duration of the cycle. However, on the other hand, there is still quite a good chance that the Fed might back down from increasing the rates, which I think is not very likely, but there is some chance of that. And this intermediate cycle has already been going on for about 3 months, so it's already halfway through. So dollar might even actually enter its declining phase relatively soon if the Fed doesn't hike the rates, or if it's very, very dovish in its comments for early 2019. And in addition to that, US dollar is quite far above its 200-day moving average, and it wouldn't be bad for the US dollar to cool off a little bit and move back down towards its 200-day moving average, doing some mean reversion. So, guys, to be honest with you, I'm not really sure what is going to happen to US dollar. Is it going to strengthen over the next several weeks before actually entering a declining phase of this intermediate cycle, or is it going to gradually slide down from here? Well, there is slightly more chance that dollar is going to strengthen over the next several weeks, but I'm really not sure about that. Say around 55 to 60% chance for a stronger dollar over the next several weeks, but not for that much longer because there will be time for this intermediate cycle in another several weeks to enter its declining phase. Now, looking at gold, gold has been relatively strong recently over the last couple of months. This intermediate cycle has started in August, so it's already been going on for 4 months. Usually, again, these last for about half a year or so. So duration wise, there isn't that much room for gold to keep rising and keep rising. If by some chance Fed is very, very dovish or even doesn't hike, I do think that gold has a chance of some sort of a nice spike, because a skip in the Fed rate hike is not really anticipated by the markets. But even if that happens soon after that, I think gold should enter its declining phase before it can really strengthen. I think probably somewhere in the first quarter of 2019. Additionally, on the RSI, that's a 14-day RSI, we see that it's not that far from overbought levels. So there is still room for gold to potentially rise if Fed is very dovish, but there's not that much room for gold to strengthen. Another thing is this 200-day moving average. Gold is now trying to close above 200-day moving average. It hasn't done so over the last many months. And is it likely that gold is going to easily close above 200-day moving average on its first attempt after breaking above it? So I think there is some chance that gold is going to bounce down from these levels, especially with the Fed rate hike, and take another attempt a little bit later at cutting through the 200-day moving average. And on the shorter term scale, this current short-term cycle, daily cycle in gold, has been going on since the middle of November. These usually last for up to a couple of months. And if gold actually bounces down from 200-day moving average with a Fed rate hike over the next couple of weeks, that would give us a daily cycle that would probably end somewhere in early January. So as you see, again, unfortunately, I'm not really certain where gold price might move. And again, similar to what dollar might actually do, depending on the Fed, I think there is probably around 40% chance gold might strengthen over the next couple of weeks, moving towards around like 1280, 1290. And I think there is slightly more chance, say around 60% chance, that gold is actually going to struggle over the next several weeks. And for that reason, I'm wondering what should I do with my GDX position. I have an average buy price at about 20.4. GDX at the moment, as you see, is at about 21.32. So there is some sort of small profit, although it was painful to hold GDX through this bottom. And yes, GDX is relatively strong over the last several weeks. But how long will this strength continue? On one hand, if the Fed is sort of quite dovish going into 2019, then I guess GDX might push through further towards, well, say 22 or something like that. On the other hand, it's sort of in the time band to cool off a little bit. Plus, RSI is already touching the overbought levels. Of course, it could go deeper into the overbought levels. So that kind of makes me hesitant. And I'm considering maybe I should sell, say, about half of my GDX position and try to buy it back whenever a pullback occurs, probably over the next couple of weeks. After all, I'm not going to sell all of the GDX position, and even if it does have a really nice run up, I wouldn't miss that run up completely. At least I would have half of whatever I have in GDX at the moment. I wonder, what do you guys think? Will GDX collapse after the announcement from the Fed, or will it run up towards 22 and maybe even 23? Let me know in the comments below. Hit the like button if you would like GDX to be above 22. Well, what the hell, if you'd like GDX to be below 19, also hit the like button. Subscribe to the channel if you haven't, and Thanks for your attention.